Well, good evening and welcome to another edition of Capital Market Live on Channels Television. I'm Ladi Williams. World financial markets kicked off the first full trading week of 2026 with renewed activity after the holiday lull. Investors, digested mixed economic data and returned to risk assets. But first, congratulations to Nigeria. Yeah, we just beat Algeria today, so definitely we're going to the next round. Congratulations, Nigerians. But investors, I know you love football too. So at this point, we had a good week in the markets, and we're also winning matches right here. But let's get a quick check on what played out in the oil market. We see this week oil markets saw crude prices rebound, modestly, with both Brent, WTI climbing as geopolitical tensions in the Middle East and uncertainty around Venezuelan supply injected fresh risk premium into the market. And we see Brent crude there for the week up about 5.82%, closing at $63.60 per barrel. WTI crude trying to make a run, back to the $60 level, $59.44. That's how it closed the week, 4.78%, less again than Brent there. Then, definitely it's all about oversupply to the market. That's what most investors are watching at this point. But still, analysts warn that, persistent, global inventories and, weak demand growth, continue to cap upside potential right there for oil prices. But now we hear from President Trump after a high-profile White House meeting with executives from America's biggest oil companies, including, Chevron, ExxonMobil, ConocoPhillips, where he urged them to help revive Venezuela's vast but beleaguered oil industry and invest billions of dollars in its future. The discussions range from promises of security to deep industry, skepticism about the risk and rewards of returning to Venezuela's oil patch. Take a listen.
$30 million barrels. You hear that, Peter? Of oil was given to us by Venezuela. That's a lot of oil. It's about $4 billion worth, and it's on its way to the United States right now. And we want to thank Venezuela for that. And we're working very well with them, obviously, or they wouldn't have been so generous. But they respect us again. They didn't respect us at all before. So that's money that goes to the United States. Some will go to Venezuela. And some will go to the oil companies, but not that, because that's already been extracted. So you're not getting any of that, but when you start extracting, you'll get. But it's tremendous reserves, among the biggest in the world. Some people say it is the biggest in the world. And we're going to be working with Venezuela. We're going to be making the decision as to which oil companies are going to go in, that we're going to allow to go in. Going to cut a deal with the companies. We'll probably do that today or very shortly thereafter with Chris and Doug. And we're dealing with the country, so we're empowered to make that deal. And you'll have total safety, total security. One of the reasons you couldn't go in is you had no guarantees, you had no security, but now you have total security. It's a whole different Venezuela, and Venezuela is going to be very successful. And the people of the United States are going to be big beneficiaries because we're going to be extracting, numbers of, in terms of oil, like, few people have ever seen, actually.
That was President Trump there meeting with oil majors in the U.S., trying to woo them back to Venezuela to get some oil out there to the U.S. But let's get a check on markets now. Moving away from oil, we'll see European markets close higher on Friday, tracking Wall Street gains as fresh U.S. data, boosted hopes of a Fed rate cut later this month. We see the DAX, the FTSE, all the green. A bigger move from the CAC 40 in France. They're 1.44% up. You see, they all finished in green, while defense stocks extended a fifth straight day of gains on rising geopolitical spending signals there. We see defense stocks in Asia, across Asia, climb as markets reacted to ongoing geopolitical tensions, including the U.S. operation capturing Venezuela's President Maduro, and renewed focus on Greenland, while major indices like Japan's Nikkei, Hong Kong's Hang Seng Index all finished in the green there. So it's the same picture like we saw in Europe. Let's get a check on Wall Street there. They closed a strong week on Friday with the S&P 500 hitting fresh highs after the jobs report, while the Dow also set a new record despite a slip in the NASDAQ. All three major U.S. indexes posted, solid gains for the week. So yeah, the first trading week with major markets we track all in the green. Let's bring it home now to Nigeria. See the NESD Securities Exchange closed the week higher as the index was up by 3.15% to settle at 3,665 points. Market cap, that's at a 2.19 trillion. That's talking about the NESD. Trading activity was positive. Volume was up 18.95% to 4.3 million units. Value was up also by 511% to 86.22 million. Total deals closed positive, closing at 162 trades, up 604%. On price performance, Friesland, Campina, Wamco, Nigeria PLC closed 68 naira 70, up 46%. Central Securities Clearing System closed at 43 naira 7, about 20.88%. While IPOA PLC closed 1 naira 12 at 9.80%. Losers were led by Afriland Properties PLC down 18.55%. That's for the week, settled at 14 naira 75 kobo. On the activity chart, the most traded securities for the week were Geofluids PLC, Central Securities Clearing System PLC, and Okitipupa Oil Palm PLC. Those were the top trades right there on the NESD. Let's take it to the listed market now. The Nigerian exchange performed great also this week, hitting record highs to close the week on a positive note as the all-share index, that hit 3.71%. I will see where, getting more comfortable at 100 trillion market cap there, rising to 103 for the week. Yeah, quite a big move there. We're seeing levels we've not seen before. In terms of activity, investors exchanged 4.16 billion units valued at 94 billion naira. Lower than the previous week. There maybe signaling, something about the market at this point. Deals 248,254. Sector performance, we see, was all green with insurance. Yeah, 6.82%, leading the pack there. Industrial goods, 4.74%. Banking, 3.07%. So that's the color right there for Nigeria's stock markets. Had a fantastic 2025, and we see 2026 looking much better. Let's look at some director dealings right there in the market. So we did see corporate action from MTN Nigeria. Saw some directors there buying 81,327 units. Average price 504 naira per share. And definitely, when the directors, buy like this, it gives, other investors some kind of courage, in the market. Then we also see Axel Mansard. See some director dealings also with Axel Mansard there with a big director there buying, some more shares. So we're seeing buying, not selling from most of the dealers in there. All right, let's look at tax matters now. This week, all about tax issues. We see KPMG pointing out some loopholes in the new tax laws. And we also see Mr. Taiwo Oyedele there trying to, rebut some of their worries, about the new tax laws. Let's listen to what he said about, what to expect for, salary earners. Take a listen.
So if you're an employee, around ₦1 million, 100,000 naira a month, you don't pay tax. When you are even above that, up to about 2 million naira a month, your taxes will drop. Now, the employer would have presented that information to the taxman. So why would the taxman be interested in looking for an extra 50,000 when the process can take 10 years to establish?
All right, there we have it there. We're still, trying to all understand, the new tax laws at this point. We're taking every, suggestion, hopefully would get the right one that's going to favor everybody, at this point. But let's review what's played out with the markets so far. We're going to discuss all the issues there. Joining me now, Dr. Uba Jeremiah. He's the CIO, VNL Capital Asset Management. And he joins me right here in the studio. Great to have you.
Thank you
for spending your weekend, with us. And definitely it's been a green week.
Yeah, it has.
For most of the risk assets here. But let's start off with, some drama. We see President Trump, trying to tell those oil majors, you know what? Go into Venezuela. You have my blessing, to pull out of that oil and, get it to the U.S. and somehow it favors Venezuelans and also favors, the Americans. But, in your opinion, do you think the oil majors are happy do you think they're excited about Venezuela?
Well, I can't really judge their emotions, but one thing I can say is that the market behaved snobbishly to the Venezuela player. So the a priori expectation is that once a top country like Venezuela, even if they just contribute 1% of the oil production right now, based on their position in the oil market as the largest reserves holder, a disruption in their country is supposed to trigger an uptick in oil. But the oversupply of oil made it, in fact, sell off, right? And we are not seeing any significant uptick. And it begs the question, how does that trickle down to the Nigerian economy? Because we're already seeing somewhere around $65 for Nigeria budget positioning. But the greater thing is that this Venezuela move sends a signal not just to Venezuela but to everybody. This was, will I say, a remarkable move by Donald Trump, given that no life was lost and it was done in less than an hour or so. But the Venezuelan, if you could still get your parking ticket if you're in Venezuela right now. People are getting arrested, people are living their life. There was no disruption per se. But one thing is that they will soon run out of money because the government needs to continue to support the economy with cash. And when they run out of cash, borrowing from other counterparties will not be an option right now. They will be at the mercy of the United States. So the exploration in the United States might lead to the depletion of their reserves because what do they have to collateralize the loan they're going to get from the United States and to be harder?
Even though they have all of that oil in the ground.
Yeah, but but it will be harder making deals other than if you have a monopoly, right. It's hard to actually break in and make a better deal. So. Right.
But looking at oil prices though, they finished the week in the green.
Yeah, but given the magnitude of what happened, it is infinitesimal. We expected bullish double-digit moves after that kind of move.
10% rise.
Yes, maybe we expected oil hitting 45 if there was actually a move. Remember any global tension, we could see oil moving as high as 80 sometimes, but this was just snuffed off to me.
Right, because I've been tracking, the price movement, so far, still that range trade.
Exactly.
Even from 2025. We see Brent, when it tries to get to 59, then we now see that bounce.
Exactly.
So that might be what's happened or what's played out.
It's just an oversupply.
This week.
It's just an oversupply.
I did forget to talk about, to touch on, crypto assets. Yeah, we'd say Bitcoin finished the week, quite, mixed. See the just about 0.61% for Bitcoin, 90,517 Ethereum. Down 0.25, but XRP, that's the real one there for the week, about 4.41%. So we're still seeing, I don't know what to call this sentiment in the crypto market. How are you seeing that?
Yeah, so Bitcoin is a good barometer for risky assets. Even the S&P, even if it hits all-time highs, one thing you should note is that if you're looking at week to date, the Mark 7 are not really moving as much as they were supposed to move compared to the other smaller cap stocks, and Russell 500 is doing better too. And even looking at companies that have significant exposure outside the United States, they're doing better because of the decline in dollars and some of the global political tension. We see gold and silver doing double digits. Come on, silver did 80% and gold is still bullish, right? So this is all conforming to the reality of when the VIX is up, risky assets slump.
Right. So, so much to unpack, and we still have, the local boss here. We're going to be unpacking that, but we're going to take a quick break right now. I still have Dr. Oba here with me. We'll also try and navigate what's played out in the Nigerian capital market. That's in a moment. Just stay with us. Welcome back. Well, we're still following the money right here on Capital Market. I still have with me Dr. Uba Jeremiah, CIO of VNL Capital Asset Management. We're packing what's played out in the major markets that we track so far. But let's bring it down to the local boss at this point. First full trading week of 2026, still in the green at this point. I guess the euphoria from 2025 is still with us right here for the local boss. How do you see the play out?
Well, all I can tell you is that Nigeria is not settling for second place, you know.
Even though we won today, Super Eagles, shout out.
Shout out to Super Eagles. But yeah, like you said, 2025 was one of our top performing stock market, double digit, 50-something%, only second to Ghana, right? So, and even in 2026, we are on pace to do similar. And we have seen some corporate action moves, and we have seen some positioning by some heavyweights in like First Bank and even in Seplat. So we are seeing the oil, the finance sector pushing forward, pushing double digits, and even some companies are making some bold moves, like the unicorn of Flutterwave is investing in eTransact, right? We saw eTransact do almost double-digit 30-something% week to date. So the NGX is moving in a pace where we could double. I saw you say we are getting comfortable at 100 trillion. Very soon, we could see this year comfortably move to 200 trillion because of some IPOs. If Dangote comes in listing in 2026, we could see the market capitalization double instantly because of the positioning and open the market. I feel the market is going forward, and investors that are buying now are definitely going to reap huge benefits long-term, 3 years, 5 years down the road.
Right, and you know, it just reminds me of the sayings from, you know, the biggest investors. You know, they say, buy when the market is fearful, and sell when there's so much joy in the market. And you know, looking at Nigeria's capital market, we've had a lot of joy looking at the equities market. And everyone seems to believe that this joy will continue. You know, at this point. But if what Warren Buffett is entering to say to go by what he said, should some people be checking out right now?
So, I love Warren Buffett, but to be honest, Warren Buffett is not going to make any money if he comes and plays in the Nigerian capital market.
Is it?
Yeah, because you know the dynamics are different, and the structural move, macro move, and how everything plays are a little bit different right here. Because Nigeria is what we call semi-weak form market, right? So it's a little bit porous, but it means that there's a room to grow. There's still a gap between when value is seen and where value is realized, right? So more importantly, there are different drivers of the Nigerian market that might not be traditional to a more systematic market in the United States. So that room to grow, even if they tag us the developing, gives us that edge to outperform and take those double digits. To be honest, there's still significant risk. We're just talking about presidents that were kidnapped, you know. I know that's not going to happen to us, but in those kind of cases, we could see capital flight when there is true turmoil in the economy, and we see disruption. But we give hearts to the presidency and the government. We have seen relatively stable economy, double-digit growth, decline in inflation, and our macros are doing awesome.
Right, and you know, definitely looking at social media, we see some influencers, you know, throwing out those gains, you know, we saw in 2025, you know, talking about NCR 1,300%, a couple of other stocks that did 500% for the year, 400%. And we're seeing some, you know, investors that have not played in this market, they're getting excited. They're like, you know what, I want to throw money in here.
Yeah.
But we don't want them to just throw it that way.
Exactly.
Because that's how, you know, you come in at the top.
Yes, exactly.
You know, most of the time. So how should investors, you know, navigate this so you don't end up holding a bag?
So honestly, it is to seek financial advice. There was a popular minister that spoke about buying shares during a rights issue of one of the popular banks, right? He said, oh, I lost 300 million and I bought this share price at this particular price. So, you know, curious me went to go and pull up a chart and say, how has this particular stock performed? And I noticed that if he could have just waited 2 or 3 years, he will have quadrupled his investment. So if you could have lost 300 and still had some capital, imagine how much he would have invested. But because he decided to take it on his own, on whims, or like you said, advice on social media, without doing his own diligent research. That's where VNL asset management comes in, right? So with the research we do, and even other capital market players, talking to your financial advisor is the best way to actually play in this market and be comfortable. You understand? You have to build something that lasts. If it comes fast, it can go fast.
Right. So, what's the best strategy here? Are we dollar cost averaging, naira cost averaging? At this point, because I've had people call me and say, "Ladi, where should I put money?" At this point, and I'm like, I'm not a financial advisor, but coming small, or you're just coming big.
Okay, so the honest
how
truth,
do you do it?
The honest truth is, I'll give you the secret, but don't tell anybody.
All right.
So, and it's from your guy, Warren Buffett. It's called compounding interest. People are too bothered about massive returns. If you look at how Warren Buffett started, he started with $10,000 and now he's able to have a reserve more than the reserve we have, almost 300 billion in cash. Now, if we look at the story, if you look at his asset movement, it just moved 10% on an average, 19 point something. So if you have consistent return and you're compounding it, no matter how quick or how intelligent you are in the capital market, you will definitely grow wealth.
Right. All right. So definitely looking at the economy, we're having different forecasts coming up for Nigeria's economy in 2026. We have macro data coming out next week. That's inflation numbers for December. Definitely. What are you seeing there?
Okay, so the CBN outlook told us that the base effect is already wearing off. I believe that. So, and we saw
we'll be saying base effect at some point.
Yeah, definitely, because we're going to see inflation research or even uptick a little bit. I personally feel we might still see a decline in the next month, but subsequent months we're going to see movement ups. So we're already seeing yields move up, right? We're already seeing that there's going to be accelerated borrowing costs. We're already seeing that most things are moving up. And remember, the CBN did so many stuff, but they didn't fix the structural issues that affected the fundamental inflation cost, which is food inflation. So we're going to see a resurgence in food inflation. And ask anybody that their rent increased this year because core inflation was really persistent. So all these things are going to trickle down into our inflation numbers, pushing it upward. Some analysts say 16% at the end of the year. CBN outlook says 12%. Either way, like I said, inflation is going to resurge. We're going to see a resurgence of yields, but government spending is not going to slow down. We're in an election year for crying.
Right. What do you see for the naira?
Oh, the naira. So it's solely dependent on the move of the CBN. For CBN not to retract most of the gains they have done in the macro, they have to be much hesitant in cutting rates. If they could push the rate cuts to just 25 basis points for the entire 2026, we could see the naira stable or even improve. If they don't cut at all, we could see the naira even hit 1,002. I feel, for my prediction for naira, worst case scenario, 1,350 if the CBN maintains this hawkish policies.
Right. So, definitely that means it might be quite boring, when you look at the monetary policy side of things, if we end up holding, most of 2026, because I believe that's what played out in 2025. We had that long stretch of hold, and we had that, one cut.
Yes, definitely.
That wasn't so deep.
Yeah, exactly. So
maybe we might get one cut.
Yeah, I think holding is a tactical genius, honestly, because pushing inflation, like there is a misery cost to higher borrowing.
Right.
We want to expand the capital market, we want to expand markets for businesses, but by the time people have to finance their loans with double-digit interest, it adds to the misery index. So, and cutting it right now with the government spending plans will only accelerate inflation even further. Right. So holding is tactically genius.
And we did see forecasts for poverty levels in Nigeria. They get the one from PwC saying they're seeing poverty rising more, and even though we have one of the best outcomes from, when they look at the stock market.
Oh,
what some people are making from this stock market. We've seen poverty levels, forecasts that it might rise. But hopefully we'll get the best, at this point. Thank you so much. It was great having you again to unpack what's played out so far in the markets. Dr. Uba Jeremiah. Thank you so much.
Thank you for having me. And
that's the show today. Thank you so much for watching Capital Market. We'll be back again next week. Follow the money as usual and try and get some profit. I'm Ladi Williams. Bye for now.